So in our very stylized catchment, we have an upper zone with one dairy farm, one sheep and beef farm, and 2 forestry blocks. And in the lower zone, we have 2 dairy farms, an arable farm, a district council, a pulp mill, and there's a hydro company with a dam at each one of those lakes. And the profits of the hydro company depend on how much water they can put through each of those 2 dams. And of course, if you can put a cubic of water through both of them, you get more money than if you're just putting it through the top one, and then it's used for irrigation, the bottom one. So we've got 7 properties with 7 farming properties with a mix of land uses. Each of those properties has got a profit schedule for 3 different land uses, and each of those profit schedules tells them how their profits will vary based on water use and nutrient loss. Very stylized, very hypothetical units that are simplified down to very simple numbers, just for the purpose of demonstrating some basic principles and then engendering a discussion. We've taken the flow as fully allocated in the catchment. So the upper Waikato catchment is treated as fully allocated for water quantity and nutrients as being over-allocated, in particular phosphorus. And we've also made an assumption for the purposes of the simulation that the hydro operator is able to transfer or sell a small portion of its flow entitlement. That's not currently the case in the way that the permits for the hydro operator are currently defined in the Waikato River. It's just to make that clear. That's currently they don't have an entitlement to flow and they can't buy and sell any units, but for the purposes of exploring how this could work in hypothetical, we allowed them to transfer a small portion of that entitlement. And we set up a basic matrix for river condition that depends on both the amount of water being taken out and the amount of phosphorus being discharged into the catchments. And we had one of these matrices, a matrix for the upper zone and a matrix for the bottom zone. And we said for the bottom zone that the initial position was fair. So it was bordering on poor, certainly not good, and a long ways from excellent. So we ran through a bunch of scenarios, business as usual, activated sleeper permits. We constrained trade from going upstream, and we got some outcomes. Not surprising, if you start allowing trading of water, that allows more property to be developed and converted. River condition goes down. If you stop water from moving upstream, that helps, but you still get some conversions. So we then introduced a cap on the nutrients. If you have no trading, then profits go down. There's financial impact, as we've discussed. And we then allowed some trading of nutrients and then trading of nutrients and water. So not surprisingly, if you cap nutrient use, then river condition will improve. Financial returns decline, but trading helps to mitigate those financial impacts. So the research approach, just to emphasize that the outcomes that we see in these simulations are largely predetermined by the way we specify the profit schedules and that river condition matrix, et cetera. We're not trying to predict or model what's going to happen in the river or what the financial impacts are going to be on the farm. Those are largely predetermined. The platforms and the scenarios are really a platform for discussion with the people in the room about how would this policy work in the real world, what would be different, how might we improve the policy design to address some of the concerns that you might have about how this might work in practice. So we've looked at different allocations. Some of the ones have been talked about. What about holding water for the environment? How would you do that? How might you address some of the treaty issues that are obviously going to arise when you start talking about ownership and trading of permits? What difference does it make what kind of market mechanisms you have? Just informal bilateral trades or some centralized market? What are some of the transaction costs? Market power and speculation. Are we going to get water barons? How do you deal with, if you're a farmer, managing with multiple caps? What basis you use for water charges, et cetera. So just some early observations from the simulations we've done to date. We've done 3. We've got 3 more to go. 2 in Hawke's Bay and 1 in Waikato so far. We've got 2 in Waikato, 1 in Hawke's Bay yet to do. So just some early observations. Trading occurs quite easily when everyone's in the same room. That's not quite real life, and so trading might not happen as easily in real life. Even when everyone's in the same room, price discovery takes time. It's not obvious to everyone what a unit of water or what a unit of phosphorus discharge is worth. People make mistakes. They trade things at the wrong price. They realize they could have got a lot more. They realize they paid too much. And they need advice to get a handle on this, these new concepts of dollars per nutrient, as was discussed earlier. Informal trading, just with your neighbor, is easy. It's less transparent, and it can be suboptimal. It's easier to do trades with your neighbor, but you might actually have discovered that somebody who you don't know, who lives across the other side of the catchment, may have been willing to pay you a lot more for your unit than you sold it to your next door neighbor for. And that may just sound like a transfer of a distribution of income issue, but it actually can be an efficiency issue if, by virtue of that trade, you don't then look beyond, and the person who's across the catchment doesn't get another unit of water or another unit of phosphorus because you're not selling. You're now refocused on how you're going to use that unit of phosphorus on your own property. So those informal trades can result in an in-group benefiting and a new entrant being excluded, or someone who's not part of the group missing out. There's some opposition to putting a price on water for a variety of reasons, and those are issues we're talking through in the discussions after the simulations. Putting a constraint on transfers upstream, but allowing some, but up to a limit, can create pressure to act quickly. That can cause people to miss opportunities or to make mistakes. Putting multiple caps on creates some interesting dynamics that we're still exploring. The most limiting input will tend to attract value away from less limiting inputs. We've seen that discussed earlier today in the case of water versus land. If water is the most, or nitrogen discharges versus land, but the same thing is true in terms of nitrogen discharges versus water allocation. The one that's most limiting is going to tend to attract the value away from the other inputs. And we get some unexpected results, partly because people are still learning, but partly because profit is not the only driver of behavior. And so you don't get efficient outcomes in a financial sense necessarily, although it may be efficient socially from the point of view of what an individual actor was trying to achieve when they made a decision. And we're also just thinking about what we might learn from Lake Taupo. Yeah. So I'm just going to skip this and say there's lots of issues that we are trying to think about in doing this. There's a pretty tall order from MAFNers of what they want us to comment on and what we can realistically hope to inform, I think. But just a few final points. Limits are coming. Market-based instruments can increase the efficiency of how we manage within limits, and depending on how you specify some of those initial things about the allocation and other things, you can deal with equity and some of the social and environmental issues as well. Some might be more suitable than others, some catchments, and so we need to design to address those concerns. Okay, a galloping romp. Happy to take questions and to hear any things about what you have, any questions you might want us to explore in the last couple of simulations. Over to Howard.
Thank you, Jim.